You're listening to Therapy for Your Money, a podcast about all things money and finance for therapy practice owners. If you want to feel confident and in control of your financial life, then you've come to the right spot. I'm your host, Julie Harris. I'm an accountant and the owner of Green Oak Accounting. My firm specializes in working with private practices across the U.S., and my team and I have worked with hundreds of private practice owners. I'm on a mission to share all the best practices I've learned along the way because I want you to have a profitable private practice. Hi everyone. Today we're talking about all the different kinds of insurance that you might need for your business. This topic is so important. When you work so hard on your business, you really want to make sure that your business and that you personally are protected in case anything happens. There's so many different kinds of insurances. As an accountant, I get a lot of questions on that. So today we are talking about what the options are and what you might need at each stage of the business. So my guest today is Jake Mellor. He's the owner of Mellor Financial Services. Jake, welcome to the podcast. Can you tell us a little bit about yourself?
Hey, Julie. No, it's a pleasure to be here today. I'm excited. We're going to discuss risk mitigation. We're going to talk about all the various forms of insurance and, help answer some of those questions your viewers have been having recently.
Perfect. And Jake, you and I have known each other for a few years now. You're such a great resource, always such a wealth of knowledge. And your firm specializes in insurance, wealth management, tax prep, and tax planning. Is that correct?
Yes, we do. It's kind of an umbrella of services, a good menu of business resources, and it's been fun. It's been a bit of a roller coaster with COVID, with everything going on, but it's been exciting to help those businesses stay in business and to do the very best they can during these trying times.
Great. Well, so Jake, I was on your website earlier today and I saw something that was such a good reminder to me. And it was that insurance and wealth management are about maximizing the return and minimizing the risk. And it tends to be something that business owners put off, even though it has such a huge impact, don't you think?
A lot of times when something is mysterious or not what you do every day, we tend to avoid it. We tend to do it last. We tend to not prioritize it, and yet it might have the biggest impact on our business. And so, yes, I see that very commonly, and you could say that's why I have a job, so to speak.
That's true.
We're here to help those business owners make conscious, deliberate decisions about their future, about their business, about their families, and overall protect their income.
Perfect. So why don't you tell us about the main types of insurance that a small business owner might need?
Absolutely. So typically, small business owners, depending on their size and their operation, can get altogether several different types of insurance in a business owner's policy. We call that a BOP. So a business owner's policy includes your basics, sometimes property or premises insurance. So if somebody slips and falls at your office, that would be covered and taken care of, as well as if you own the property or lease it, it would protect or insure your contents, your equipment, your valuables that you own, even if you don't own the building itself, as well as general liability. Now, general liability, a lot of people are familiar with that. If in the course of your business, you, through your operations, offend or harm someone else, or they can prove or claim that you harmed them, they may sue you. And that, of course, is a business interruption. It could be a detriment to your future income, and it could cause loss of current assets, which, all of those things we want to protect so that you can continue to do what you do best as a business owner, so that these business owners can continue to focus on their daily activities and not be ruined by, the sue-happy nature of today's society.
And so you mentioned earlier a key man policy, and I've always understood that to be a good idea in a situation where there's someone at the very top that has a significant amount of very specialized knowledge and where the business would be in distress if that person were to pass away. Can you tell us a little bit more? Do I have the right definition of a key man policy?
You do, yes. If the operations of the business would be interrupted because of the loss or death of one individual, that could be an owner operator. It could be just an employee who has no ownership but is very vital to specific operations. A lot of times vice presidents of divisions or just practitioners who have specialized knowledge, any type of specialty that is hard to find or hard to replace, then it is very acceptable to purchase a key man policy on these types of people. And it can be done in a number of different ways. If you're only concerned about replacing them if they die, then you could do that with a term insurance policy. If you're looking at providing them with some type of cash value benefit, then that could be any form of permanent insurance, which would also not only provide a death benefit so the company can scour the region or scour the country for somebody with similar talent to replace them and incentivize them to relocate and to pick up where the other person left off, but it could also provide them a significant dollar. Again, a lot of people refer to this as the golden handcuffs, or you're tying them to your company with a large financial incentive that they only receive if they do so many years of service with you. And so
Perfect.
that's typically, those are various forms of utilizing them and making the most out of a key man policy.
So in some cases for the key man policy, the key man, that really important employee, will be the beneficiary of the policy. And in other cases, it's going to be the actual business.
Yes, I would say under most scenarios, it is the actual business, unless there is a future date when that key man also receives the cash value benefit. At that point in time, then he also is the recipient of the entire policy. The company would transition ownership of the policy to the employee. And mechanically how that works is it actually works a little bit every year, but as the employee vests, but the employee doesn't receive full ownership or control until that final year.
Until the end.
Yes.
All right. Let's move over to malpractice insurance. So in the case of a therapist or any kind of medical professional, they pretty much need malpractice insurance from day one, right?
Yes. The moment they have their first patient, the moment they have revenue, they have risk. And, even in today's society, it didn't used to be this way. Even if they have perceived wealth, perceived revenue, they are very suable, if that makes sense. It used to be you could only sue somebody based on what they have today. So if all they have today is a whole bunch of debt, they didn't have anything that you could sue and get. However, now brand new practitioners right out of school, up to their nose in debt, they have what's called perceived income potential. And courts have allowed lawsuits to extend beyond today into the future based on what they possibly could earn down the road. And so now, whereas before we would only provide limits of coverage up to what they had to possibly lose, like in their bank account or on their balance sheet, now we don't provide limits of coverage for practitioners less than $1 million, because sometimes that's where the lawsuits start, even if they are recently graduated, right out of school, just starting their own business.
Okay, so in the past, if you had, for example, $100,000 in the bank, that's really all someone who sues you could go after. But now that perceived wealth is all your future earning potential.
Not all your future earning potential, but yes, it does extend into the future quite a ways. And of course, the courts aren't so one-sided. They try to look at what damage is caused, but that odometer, so to speak, has increased rapidly over the last 20 years. And so, yes, we typically, if somebody is requiring a therapist, like if a therapist or a clinic contracts with another service or provider and they have to provide a certificate of insurance, it's been a long time since we've seen somebody request proof of coverage of less than $1 million of general liability for a practitioner.
Okay, so that's typically going to be the starting point.
Yes.
Okay.
Well,
what are other kinds of insurance that we need to consider as well?
So you got the malpractice, which is also called professional liability. If it's a larger operation, like a clinic, and there's multiple practitioners, I keep calling them practitioners. I hope you don't mind.
That's quite all right. Everyone will understand.
Yes.
Practitioners, therapists, all the same.
Mm-hmm. If it's a little bit larger of an operation, it's more of an association, a cooperative, a board, or if there's a board of directors, there's a directors and officers policy, and that policy protects internally in case of lawsuits, sexual harassment, internal HR issues. That type of policy protects the board from itself, so to speak, or from its own employees. If you have employees, it's also important and critical to have a fidelity bond, or an honesty bond, or a type of insurance policy that covers the same risk, just in case employees are dishonest and they steal from you, so to speak. They steal from you, or they steal from the clients. Another really important issue is cyber liability, or what they call a commercial crime policy, depending on the size. And
okay, what does that one do?
That would include, depending on the insurance company. And again, what one insurance company uses as a term could be defined differently by another. And so you have to be critical over what the real coverages actually are. But most often when I set this up for somebody, it includes if employees leave sensitive client data out on the desk and other patients come in, they see it, or they might take the paper. That's really the fault of the company for making that available, if that makes sense.
So that would be cyber liability versus malpractice.
Well, that would be oftentimes included. There are certain cyber liability policies that don't include that, but I try to make sure that they extend so far as to include that. Usually cyber liability is you've got a hacker leaning against the outside of the building trying to bypass your firewall and gain access to all of your clients' data. And they will hijack your data and try to sell it back to you, or they'll try to sell your client's data to somebody in another country for fraudulent purposes. Any number of criminal methods and ways of gaining access to social security numbers, birth dates, driver license numbers, means of identity fraud, all of those things in today's world become more and more prevalent. Right now with the pandemic, with the crisis, everything going on, it's also been the highest rate of cyber crimes during this crisis than what we've had in prior years, in probably the last 5 to 10 years.
Wow.
It's been more prevalent right now, which means that protecting your business against something like this is a greater need than it's ever been before. So
let's say there's a practice that's fully remote right now. The records are in an electronic health record that is in the cloud, right? And for example, if there was a breach of that data, either by a stolen password or just someone unauthorized logging in, would the protection of HIPAA protected information be included in a cyber policy?
Typically, yes. The type of cyber policies would be specific to your industry and specific to the regulations that you fall under. And yes, so and some of the methods and means are sometimes forgotten about. Like, what if you just left your computer on at a public location, or somebody stole your phone and your phone had access to this information? Somebody broke into your home because you work remote and they gained access to a thumb drive, or just any of these losses of sensitive data, no matter how it occurs. You want to make sure that your policy, because not all policies are created equal, that it extends to a lot of these different types of risk where you have a breach of information or lost data on your clients.
So when you are looking for a cyber policy, you would want to probably, as a business owner, think through how are the ways that someone could access this protected information.
Yes, as well as a good insurance agent will help review perhaps things that you're not that familiar with. Again, business owners typically avoid these issues because it's not something they deal with every day. And who wants to be a pessimist and think of the worst possible scenario? And they've got things that distract them every moment of every day within their normal business operations. And so a good agent will help bring to light what some of these risks could be within their specific industry, if the agent is experienced with working with therapists, working with these types of businesses.
That's really helpful. So I would love to hear from you when you think a practice owner might need life insurance, short and long-term disability.
Great question. As a business owner is increasing their revenue, they have more risk. their general liability policy and their malpractice insurance and everything else is all kind of determined. Their expense, their premium on what they're covering is determined based on the total revenue that they're generating. The more patients that they see, and it's a formula, right? The total number of patients that they see, the region that they serve, the demographics of the local population, as well as the overriding item, of course, is the total revenue. And as that continues to increase, as they continue to become worth more, as their business becomes valued higher, those are all key indicators of when somebody should review what they currently have as life insurance, consider getting it through the business, understanding that the business has an insurable interest on the owner as well as the main operator. And implementing these measures actually helps secure the future finances of the company and make it more sellable, if that's a desire or a need. You know, you can show somebody what your practice looks like. Often, one form of selling a business includes the owner, operator, staying on to just be an operator,
sure,
a manager, right? And if somebody who's considering the business sees that this business owner has taken the proper precautions, has disability insurance, has long-term care insurance, has life insurance, then they don't see that individual as a risk that they would have to take care of, because this individual is basically taking care of himself. And they don't see it as a future liability. They just see it as, well, this past owner who's now an operator, a manager, has been very wise and prudent financially, and they only see him as an asset to the company.
Because those pieces are in place. That's really interesting.
Because they've done proper business planning. Yes, not just personal planning, but business planning. They've made the business more attractive to investors.
Interesting.
Or to other business owners, yes. And that oftentimes is part of a selling presentation if done right.
And on the personal side, my opinion is always that life insurance is a great idea. If you have a family, if you have children, you need life insurance. Do you agree, or do you take a different position there?
You know, I had somebody put it very simple to me. And they said, if there's anybody that you love or owe money to, you should have life insurance. And, you know, there are those people who are very biased and want to accomplish everything in life without using life insurance, and that's very doable. In most scenarios, it's not as efficient. And you know, being an advisor, we try to help people do things in the most efficient way. We're seeking to get rid of waste. And to be quite honest, it's rare that there is a scenario in these types of business circumstances where life insurance doesn't come out to be the most efficient thing for the business owner to do from a cost-benefit standpoint.
Got it. Let's talk short-term and long-term disability insurance, because I think that's not utilized very often. But I also think there could be a really great value for the business owner there.
Absolutely. A lot of times, small practitioners who have some staff will even get, because it's a lot more affordable to do it this way, they'll get the short-term disability policy as a company policy for all employees. And they do it because the cost, if you were just to insure one person in a company versus 3 people in a company, the cost for those 3 sometimes is just as much if you were to insure just one person on a short-term disability policy. So from a cost standpoint, it makes more sense to insure a team of people rather than just one person. Mathematically, for these insurance companies, they've found that type of formula works out well. Also, providing a short-term disability benefit, typically I see around 3 months. Some people use this if there's like maternity leave and things of that nature. They can still derive a paycheck until they come back to work. Other people, you know, they just foresee the future where there may be an accident, there may be something, a broken arm, whatever, and, you know, they're going to need some time to recuperate before they come back, but they still want to receive as a tax-free benefit or as a taxable benefit, depending on how it's set up, the equivalent of what they would have been paid through their employer, but they get that paid through the insurance company instead. I would say that the short-term disability is overlooked individually way too much, and it's interesting that the HR people and the owners oftentimes do provide this benefit for the employees who wouldn't have done it for themselves, but typically it's utilized by the employees more than the owner. And so it becomes a great company benefit. The long-term disability, again, is very critical, especially for some of these business owner operators. So a therapist who owns the practice and works in it every day. The type of overhead, the type of expenses that an individual like that has monthly is far greater than, just like a real estate agent.
Sure.
So this type of individual, it becomes very critical from a business income standpoint that they're able to keep their business whole, even if they're not able to be there working for an extended period of time.
And so what do you see offered most often as a benefit to employees? Is that short-term or long-term disability?
I see probably most often a short-term because it's quite a bit less expensive. You do see a combination of short-term and long-term in a lot of clinics and other areas. They try to match up the periods so that, if it's a 3-month short-term disability policy, then on your long-term disability, there's an elimination period. The elimination period is like a waiting period before it kicks in of like 3 months. So that they pay back to back and the person never actually loses any income. I guess you see other forms where they're only focused. They're trying to incentivize employees not to take time off work. So they don't do a short-term policy. That's the thought and mentality of I guess a lot of business owners. If somebody becomes disabled and they're not able to return to work, if they can't come in like 2 months, then definitely let's help provide them with some source of income. I do see the reverse mentality where they think that way, and oftentimes they'll have, instead of a 3-month, they'll have a 2-month waiting period, and then they'll kick in with a certain number of years of benefit after that, where they'll continue to get paid for so long. You have some vocations where you can do disability insurance and it'll provide you income until Social Security age. You have other vocations where you're more at risk and the insurance companies will only insure up to 5 years. And then for cost purposes, some employers who purchase this for their employees really only want to provide like 1 to 2 years of income, because at that point, if you're not able to come back in 1 to 2 years, then they really want you to find something else anyway.
Okay. Does that make the policy less expensive then if you're only providing a few years? Got it. So that would be the advantage to the business owner, where you've got that benefit, but it's not nearly as expensive as a long-term policy that's going to get you to Social Security age. Is that it?
That is correct, yes.
Got it.
And they do take a company census. They don't ask for specific ages anymore, but they do ask for age ranges, how many employees fit into each 5-year category, and that does determine the premium a little bit as well.
Perfect. You know what? We haven't talked about workers' comp. Can we touch on that for a minute?
Absolutely. So think of disability insurance, but when you're on the job. And I actually, in some states, owners of a company can waive their right to be included in the workers' comp, which oftentimes makes the workers' comp insurance less expensive. Utah, where I live, is actually one of those states. Other states like California, they do not allow a waiver of the owner from the policy. And we do a lot of workers' comp out in California. You can get workers' compensation if you're a brand new company. A lot of times they don't give you a lot of options because insurance companies want to see that you've got 1 to 2 years of experience before they consider you. And so if you're brand new, just started up your clinic, sometimes, well, honestly, workers' comp for a therapist is not that hard to get. But for other business owners, sometimes all the insurance companies will turn them down if they're brand new, and they'll have to go to their state fund. So all states have a state workers' comp fund that you can go to as a last resort. And it's usually up to 2.5 times more expensive than what you could get through a normal traditional insurance carrier. And so there's an incentive for you to not stay there very long. But a lot of business owners get it set up when they first get their practice going, and they just forget about it and keep paying needlessly a lot more than they have to through the state fund. Once you've got a mod rating, and that basically just says that you've got a year or two of experience and you have or you have not had any workers' comp claims. They give you a rating, and that helps you get quotes a lot easier from traditional insurance carriers because of your loss runs or lack of having any claims.
Because of no claims. Got it. So the state fund will take anyone, basically.
Yes, exactly.
Okay. They'll take anyone. There's also a lot of pay-as-you-go programs, right, through payroll companies. Do those tend to be more expensive than shopping the workers' comp around separately?
The pay-as-you-go companies, and they're through payroll. There's a few other insurance carriers like Guardian and a few others that do monthly. Those sometimes can actually be more beneficial for an individual. They typically do not require the end-of-year audit on payroll that most workers' comp companies do require. And they can be beneficial from that standpoint. Can they be a little bit more expensive? Possibly, yes. But are you able to change more quickly when you hire new employees as you're transitioning and maybe laying people off or contracting out and making those types of HR changes? They are a little bit more responsive because you can update that very quickly with those companies that operate through payroll service.
Usually that's done automatically through the payroll company as well. So you don't really even need to do anything. It just happens automatically based on the payroll that you're running.
Typically, yes. Now, you might spend a little bit more or whatever, but you get rid of a little bit of a headache. Now, some similar options are also available through the traditional insurance companies that are just not explored. And it really, a lot of it depends on your local demographics, the types and class types of workers that work for you. Therapists, again, I think you have it pretty easy compared to other business owners.
Like construction, it's a lot smaller risk than other industries.
And so after about 2 years, you get a mod rating that's really low, and your insurance doesn't cost very much at all. And so for workers' comp. Okay. Again, demographics, if you're in Silicon Valley, it's different than if you're in Alabama.
So pay-as-you-go is not a bad thing. Especially, I've been through a lot of workers' comp audits. They can be really time consuming, right? So being able to not have to do that in some cases, that makes it worth it.
Absolutely, yes.
Good to know. I have another insurance on my list that's somewhat new to me. It's EPLI, which is Employment Practices Liability Insurance. Can you tell us about that?
Yes. So I was talking about the directors and officers policy a little bit earlier. The EPLI is just like that, except when you don't have a board of directors, it's just, amongst internal employees and between ownership and employees, or just amongst employees to employees. If there are sexual harassment claims, if there are just employment practice issues, so any of those HR issues that come to mention, whether you're following state practices or not, or confusing state practices with federal practices, which are sometimes different, Department of Labor issues, all of that stuff is pretty much covered in EPLI and is very critical in today's society, where there's entitlement mentality amongst employees.
Oh, interesting.
Yes. So, just any of those reasons why an employee might sue you. Or the reverse is also true. If employees are negligent and they cause you to be sued because of something they did. And so a lot of that crosses the line between general liability and internal practices. But the bulk majority of everything that is internal amongst employees is covered under the EPLI.
EPLI. I've heard of some policies also having a support line where you can call with some of those employment law questions and HR issues. Have you found that to be pretty common, or is that the exception more than the rule?
No, that is pretty common, and it's become more and more prevalent, where these insurance companies will even provide you a portal of HR information that's specific to your state, and a lot of templates that you can use as forms in your business. That used to be rare. Now it's become, in the last 5 to 10 years, it's become more and more prevalent, where it's almost an expectation. When you get a policy like this, you can reach out to the insurance company and they'll provide you with additional resources to help you. I mean, it's in their incentive for you not to file a claim, right? And so they want to provide you with the resources that make it necessary for you to do a good job internally with your HR practices.
Okay, so if you're considering hiring an outsourced HR person to help with some issues or having some employment law questions, this could be a resource that you're able to reach out through if you have this insurance.
Absolutely, yes.
Okay. Would you still also need an employment lawyer?
I think what you could probably do, depending on what you're trying to do, a lot of it is going to be provided through the insurance company that they have on staff their own lawyers and attorneys. Now, will they make them available to you? They usually retain those until there's an issue or a claim, right?
Right.
At that point, the insurance company, they use their attorneys, so you wouldn't need to use yours because that's part of the insurance, right? So you should be taken care of as long as you have the right coverage.
Okay. So you may still want your own employment attorney to review, for example, your employment contract. They might not do a contract review for you, but they might have some templates that you could use.
Yes.
Got it. All right. Really interesting. Is there any other insurance types that we should talk about?
There's so much out there, and each person's individual situation is a little bit different. When it comes to business owners, you can mix and match a little bit based on the various companies and what all they include in their coverages. So we talked about like a fidelity bond or dishonesty bond and some of those things. Now, if you have an EPLI policy, some of that might cover all of those risks. If you're just starting out and your revenues aren't that high, you probably don't necessarily need an EPLI policy to begin with. And you could probably save money by spending just a couple $100 on an employee dishonesty bond. And so there's a progression as your business grows, what insurances start making more and more sense. And if you're able to work with a good advisor who can help you protect your business income, protect you against risk, and help manage the risk as you're growing, then they will take you through that natural progression from one insurance to another, or increasing limits of coverage, or changing policies altogether so that you have the right matrix of protection and not spending more than you need to. We do a lot of reviews for business owners, for therapists, for practitioners, and find that there's a lot of inefficiencies. They have policies that cover the same thing and they have multiple of, and they have big gaps in coverage that aren't covered at all. That's probably what we see almost every time. And so we rearrange it so that the coverage is filling in all the holes and gaps, and then we get rid of the waste. They don't need. Sometimes in business practice, redundancy is important, but not when it comes to insurances.
Not when it comes to insurance. So I was going to ask you, what's the difference between working with an insurance broker like you versus a local State Farm agent, for example?
Like a State Farm, and not to pick on any name. In fact, everybody always says, hey, look, it's Jake with State Farm. Right?
Because you're
and sometimes I wear khakis, so it's all I need is a pair of glasses and I could be the guy, right?
Right.
But their hands are tied when it comes to certain things, in the sense that they only represent one company. And so they're considered exclusive or captive to one company on one company's offerings. An independent insurance agent has contracts with multiple companies and should, in theory, represent the client and help the client buy, rather than representing the company and trying to sell the company's products. And so in theory, somebody like myself or my firm, we are an advocate for the client, helping the client make a better purchase. And we're agnostic when it comes to what company. And so I guess that would be probably the biggest difference. Coming down to coverages, some insurance companies, and I don't want to pick on anyone specifically, but if they're exclusive or captive, a lot of times what they have may not be a proper fit for your industry. This isn't always the scenario, but they may just not have on their shelf of products something that's tailored for the risks inherent in your business, because they can't do that for everyone.
What I found also is working with someone who's captive to one specific company, sometimes it feels a little bit like they're trying to put a square peg in a round hole where it doesn't quite fit, but this is all they have to offer. So they're going to try to make it work.
Yes. And of course they're a mini business owner themselves as an agent, and they're trying to make sales, right? And they're limited to what they can do. So they try to customize their few products but it doesn't always work. Give them a thumbs up for best effort, but when it comes to a competitive stance, typically an independent broker who has all these companies at his fingertips, if the independent broker is being honest and is really doing what's in the client's best interest, almost in every scenario, that independent broker is going to find a better fit for the client.
Better fit and better rate.
Yes.
Yeah.
Better coverage, better rates.
I'm going to give you a couple of lightning round questions. So for a practice that's just starting out, what are the top 3 insurance products that they need to have?
There's the package deals, like the business owner policy that includes various coverages, including the general liability. So if they're just starting out, that might cover all their bases, and it's very simple and easy to get. In their business owner's policy, if they have a business vehicle, that can also be included, oftentimes depending on the carrier. And that would probably be the insurance to get started with. Okay. If the business owner who's just starting also has a young family, has any debt, unless they're single and they have no dependents or nobody else that they're taking care of, they should probably also get a cheap, inexpensive term life insurance policy, something that doesn't cost a lot, that's not a burden. But if other people rely on him or her and, for a paycheck, for a livelihood, for food on the table, then, they should just cough up $10 a month, and get $500,000 of life insurance.
Yeah, small term life is not expensive. Okay.
Right.
So lightning round number 2, what would be your top 3 for a mid-sized practice somewhere in the 1 to 5 million per year range? What would you add on to that BOP policy deal?
Possibly in that range, the BOP is not going to be sufficient. Limits of coverage only extend so far under BOP, and when you're in the 1 to 5 million, you need to get more of your typical general liability policy separate, your auto policy and all of those other things separate. You probably at that point, 1 to 5 million, you're more than just a sole practitioner and you've got staff. You should consider the EPLI policy very heavily, very strongly. And 1 to 5 million, you've got a book of business. You've got a list of clients and patients. You need the commercial crime policy, which is kind of the larger version of a cyber liability policy. So cyber liability, probably fine. Once you get to the 5 million mark, you probably need to be jumping into the commercial crime policy, where it would cover you in instance of a large loss of data.
Perfect. All right. Last big question. What's the one insurance product that you see missing when you do a review of a business owner's insurance list? What do you see missing most often?
Recently, and we've touched on it a little bit, is the cyber liability. The cyber liability and the EPLI. Those two, more than anything else, you see everybody because they know they have to have general liability. If they have business vehicles, they know they have to have commercial auto. Those are like the standard that everybody has, right? But internally, dishonesty bonds, if they have retirement accounts like a 401k, a fidelity bond, and then employee practices. I have seen employee lawsuits cripple a very healthy, very vibrant business. I have seen it cripple the business, make it bottom out and plateau in the valley and just struggle because of that. And that could have all been overcome by having the adequate EPLI policies in place.
And as a business owner, that's got to be just devastating to see your life's work crumble because of something that could have been avoided.
Right. And here's the nice thing about it: with a proper insurance company backing you, instead of you showing up to court, instead of you taking time away from work for all of these things, they have their attorneys that do all that. And you can go to work like normal and do everything that you need to continue to provide revenue for your business and income for your employees and for you.
That also sounds a lot less stressful. I'm so thankful for your time today. Where can people get in touch with you and your team?
We have an 800 number. We have a website, strategicinsuranceagency.com. We are licensed all over the country in most of the states and help people remotely, and we've been doing that for a long time. The 800 number is 1-800-773-1848.
All right, Jake, thank you so much for your time. I really appreciate it. I know I learned something today, so I hope our listeners did too.
Yeah, it's been my pleasure. Thank you.
All right, listeners. So I want to know, what's your action item for today? What insurance do you need to add or consider, or do you need to go find an insurance broker that's going to be impartial? I hope you have a great day. Head over to therapyforyourmoney.com if you need to get Jake's information. And we will also have lots of additional information in the show notes. Have a great day, everyone. If you need some accounting help, head over to therapyforyourmoney.com and click on the Green Oak Accounting button. There you can find out lots of information about my accounting firm and all of our specialized services for private practice owners.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.